Hello traders, this is a video for DAX for October 11th, a recap video for today and some ideas for the next period. So this in front of us, this is a chart that I'm posted this morning, a chart with zones for traders for trading for today. And then I said in Twitter that noted that 11,700 represents the main resistance level. So what was today, how today ended? First we got a gap down in pre-market session. DAX opened with a gap down, and this is the levels, these orange ones, this is the levels that I drew in real time during the session, and occasionally I post that charts on Twitter, and also I post my real-time trades there. So what was the opportunities today? After this gap down, we know already that the bias is bearish and that we should look for short opportunities. As soon as the market is opened, I will also draw some levels that are going to be reference points for the trading, like this. This is a pre-market low, the lowest price in the pre-market between 8 and 9 a.m. And then we got this pullback to the yesterday after our lows. So every stock index that you can trade, is CFD or futures, have reference points as RTH, regular trading hour session low, high, or after hour low and high. And sometimes these references can be important. So there we had a reference for pre-market low, and this was the first opportunity to short DAX when the price was touching the lows from yesterday, but couldn't go above it, couldn't go to the cash close. So if you have a gap down or gap up or whatever, but now it was a gap down, you consider the gap is filled when the price touches the lows from yesterday. It doesn't have to go to the close. If it does go there, even better. I said that I am short here, but if that trade doesn't work out, then I will short it again at the 700 level, which was the main resistance level for the day. And that was an okay trade. And after that, price touched this after our lows again, and we had another opportunity to short this market. And now note that these moves are pretty good moves for day trading. I mean, this move is from 620 to the 530, let's say 90 points. So for this trade, I used the 35-point stop with the idea that if I am stopped, I will go short again at the 700. So we had a really big down day yesterday, and after such days, it is good to either decide to go with the flow and just ask for shorter opportunities, or if you see that the day turns out to be just a big consolidation and that you can trade both sides, then of course you can do that. But for the start, I have decided that I'm going to pay more attention to the shorts. And this here was the really trade of the day, is here. Now price didn't exactly go into the zone. Price just basically just touched 700 and immediately go down. We can see this on the lower time frames, on bit lower time frames. This here was a reference to this, that this could be possible look above and fail, meaning a look above yesterday lows and then failing hard, but that didn't really fail hard, but it failed enough for day trade. Okay, let's remove that. So this, as you can see, both of these zones, these important zones, were good for trades. When you are trading this, basically you are fading the zone, and you should have your limit order already there waiting. This zone was hit at 4 p.m. I had an order there dating for before 9 a.m. I already had an order there, and I just left it there like 10 points below, because when you have big moves, market really often would not go to the zone, to the middle of the zone or to the back of the zone, or it would all traders see. We all see that same areas, and traders will often front run it. That is one scenario. The other scenario is, and that will also will happen quite often, that price will pierce this zone, but only for like 10 or 20, 10, 15, maybe even 20 points, and then reverse hard to the downside. So I was ready here. I was waiting at 690 with my stop that was 10 points above this zone, so it was 690 the entry level, and I think 725 or something like that. My stop was so again 35 points above this. I was ready to take a loss there, and immediately after I see that this price is making U-turn, to go short again. After that, so that is the idea about entry and exit. You could exit around these lows, these intraday lows. This is current RTH low was here. Then the price made a false breakdown of that intraday level. So this is maybe the place to go long. But I was concentrating more on shorts. I wasn't interested at longs at all. So I just did one short again here, one here, and one here, and in the middle something, my target was around these lows. I didn't want to just hold it, and that was a bad idea. I should keep at least half for this. But later, also this level was the only level to go long here, in my opinion. So you could go long here on these levels, but that would require good market reads and so on. And this level that dates from December 2015. I mean, there got to be, you must think that there's got to be some players that are holding their orders there, then they will defend at least once this level, and they did. And this is also a good move. This is a more than 100-point move, this here. In order to catch this move, you should also have a resting order, somewhere here, with your stop behind the invalidation point, always behind the invalidation point. So this is basically what happens today. Now, as I said before, between 700 and 400, this is a 300 points hole. But now, as you can see, we could have some good zones for intraday trading tomorrow. Bias is clearly bearish, and let's just quick look again to this weekly chart. This level is tested, and we can expect, if this bearish bias continues, and it will, that this hole here will start to make some levels also in this area. Because when you have a day like yesterday, when S&P drops 3.5 points percent, I'm sorry, and Nasdaq drops 5%. That is huge drops. That is outlier days, and it cannot be repaired in 1 or 2 days. Market, in order to make a bigger bounce, usually requires a lower low, and that lower low requires then a bullish divergence on some bigger time frames, starting for 4-hour, let's say 4-hour and daily daily time frame. So we shall see in the coming days what can we expect. I am expecting the price to go below this 11,400 and to start that we can start filling this hole here. So that is all for me. Today we had this was one big opportunity for shorts to catch with the resting order, and I know that some people don't want to use them, and they want to read market in real time, and then they got scared looking the price could moving really fast. Let's say this doesn't exist. Let's say that this doesn't exist. What is this? Oh, it's here. Okay. And now you see this move, and maybe you think, wow, this is really fast move to the upside. This zone isn't going to hold, and then you remove your order, or you don't even have an order. You are wait to see what will happen. And if you are wait and see, then you will get a bad price. You will get a better price if you just wait here with your stop above the invalidation point, and don't be scared about this move. If you can't look at it, you just walk into the other room and let your trade, let the market feel you, and let the time do it for you. There's nothing to be afraid of these situations, and even if you got stopped, that is only one loss, and you can easily make that money back in another trade. So okay, that is all for me for this video, and as always I will post in the morning the updated chart with zones. Thank you for watching this. I will wish you good trading and good night.